Video review. Today is Wednesday, May 29th, 2024. Let's find out what's going on the Forex economic calendar today. Overnight data released were in form of the NAZ business confidence from the New Zealand. That was worse than expectations, and the construction work done in Australia, that was way worse than expected, 0.6%, minus 2.9% is way below the previous number of 1.8%. German consumer climate is slightly better than expected, number of minus 22.5 points with the actual number of minus 20.9, so it steadily moving higher. We are still waiting for the German CPI data that are scheduled for release at 2 o'clock. The CPI is expected to drop from 0.5% to 0.2% on monthly basis and increase from 2.2% to 2.4% on the yearly basis. During the New York session, we got only the 7-year note auction at 7 o'clock, beige book release at 8 o'clock, and API weekly crude oil stock data release at 10:30. Because of the German CPI data and consumer climate, we are going to start our technical part from the euro-dollar. For our chart of the euro-dollar is still locked in between the technical support and the technical resistance levels. So let's just zoom in to see what is going on here. As you can see, the market keeps moving up and down from let's say 1.0820 to 1.0805 to 1.0895. So this roughly 90 pips zone is still being maintained after the breakout above the trend line. So it means that the bulls are still trying to move higher. Nevertheless, it doesn't actually work their way, as the market lacks the momentum to test the break above the 1.0895 level and then test the supply zone located between 1.0935 1.0948. The momentum just went down below the level of 50. Let me just place this level on the chart. So we just dipped below the level of 50. Now the bulls are trying to come back with a strike above this, back above this level. Nevertheless, as you can see, both of the moving averages, 150 periods moving averages, are quite close to each other on a 4-hour chart, and the market keeps going up and down, oscillating just around this moving averages. So there is no decisive breakout either to the upside or to the downside. Bulls, they don't have enough momentum to continue the up move. Bears, they don't actually pressure enough to break below the level of 1.0796, 1.0792, or even below the technical support at 1.0814. So the outlook for the euro-dollar remains steady. Horizontal movement is expected unless there is a decisive breakout in either direction. So that's the euro to the dollar. Let's just find out what is going on the euro to the Japanese yen. As you can see, euro to the Japanese yen is steadily moving higher, and we are currently roughly above the level of 170. Please notice that the trend high, the swing high before the Bank of Japan intervention was 171.52, which is 152 points above the current high. But this momentum here looks very steady, very positive, very strong, and the market keeps making local highs as it is approaching the level of 171.52, which is of course the technical resistance and some sort of the target for the bulls. Nothing changes here. Market keeps moving higher as expected. So let's just take a look at the British pound to Japanese yen. The situation is the same as it was on the euro dollar to Japanese yen, but right now we're just testing the pre-intervention high. located at 252. So this is the target level for the bulls. It was violated and local high was made apparently at 271. There you go. That's the local swing high. Momentum is of course strong, momentum is positive, and it's passing the extremely overbought conditions. Nevertheless, as you can see, the whole action by the Bank of Japan was completely useless. Market is back. Within 1 month, the market is back towards the previous level, pre-intervention level 200.52, and it looks like the market wants to go even higher. So the yen is weak all across the board. Now let's just take a look at completely a different market because of the crude oil data. Let's just take a look at the crude oil, and what do we see here is a breakout to the upside. So we got this trend line here that is marked as the orange line. We just broke above this trend line, made a local high roughly around 80.28, and right now we are just heading towards the technical resistance. This technical resistance is located at 80.60, and there is very nice zone here, 80.60, 80.80, which might act as the supply zone for the market participants. Nevertheless, with this kind of a momentum, there is a high chance of the for the bulls to test this zone. Momentum is quite oversold as well. It hits the level of 72.52. So right now, some sort of the pullback might be expected, but it looks like the bulls still want to test this at least the level of 80.60 or even the whole supply zone. So please be prepared for another spike up before the potential reversal or pullback will happen. The market is trading above 50 and 100 periods moving average, and if there is a cross on the 4-hour chart, we might see further movement to the upside, extension of this up move, and the next target would be located somewhere around $82 and then 84.44. On a daily time frame chart, the crude oil is looking very good right now. As you can see, this is how it looks on a daily, and that's it. Nevertheless, one last insight from me. If we take the price range tool and measure the corrections, we got 4.71. We got something like 4.68, which is very similar, and we can have, for example, from this low to this high, we got 5.08. Okay, so the current movement to the upside is already 5.44, which is the biggest one. No, almost the biggest one, because 5.77 is the biggest one. So it's almost the biggest one in this cycle to the downside. So definitely breakout above 80.80 will give us over 6% of increase, and that would mean we have the overbalance of price and time on the crude oil, which is why this breakout is so important. So first confirmation is here. We got the breakout above the trend line. Now we need the overbalance of price and time to confirm the upward movement way higher. Next target, as I said, 84.44. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.